tune, right? I got some comments on the song. I think people like it. I like the bass. It was actually hitting on my headphones today. So welcome everyone to the RHMax show. I'm Max, and another amazing guest today, Dip Catcher. We just keep hitting out of the park, don't we? These awesome folks that just they know what's up. They know how to give us and deliver good information. And Dip Catcher from Maximus DAO, a lot of people's favorite project these days. So we're going to talk about that. We're going to talk about HEX. We're going to talk about Pulse. It's going to be a great episode. So let's talk to the chat real quick. Wow, we got some peeps in here. Jim Rat Crypto, what's up? Always appreciate seeing you, man. Alan, got a regular. Yeah, man, appreciate you. Somebody's subscribing. Somebody's in here. Gold Key came in here. He was number one. And then, we got David James. Hey, David, what's up, man? That's a great episode. You all go back and watch the one with me and David James. That was a pretty fun episode. Let's before we just break it on down, let's just say hello, everyone. Please do not panic. HEX will probably go back up. Probably. Why wouldn't it? It keeps doing it over and over and over. So why wouldn't it this time? Why is it different? Tell me why it's different this time. World economic collapse, war everywhere. Okay, there are some macro factors involved, but still, look at the chart. Zoom out. Don't worry about it. If you're staked, what are you going to do? What are you going to do? Not financial advice, no professional advice of any kind. Make your own decisions, but hey, I know a lot of folks hanging in there. I wouldn't only panic by, hey, that's not the worst strategy, Alan. It's not the worst strategy. All right, let's bring him in. Maximus DAO founder, Dip Catcher. What's up, man?
Hey, how's it going? Thanks for having me on.
It is going great. I'm pumped. I know I've been talking to lots of people, and Hedron comes up, Mentor comes up, Liquid Loans comes up, but Maximus, more than anything, has been coming up a lot lately in a very positive light. I don't think I've heard anyone trash talk Maximus. I think I've heard other people say, some maybe things they don't like about the other projects, but Maximus, they're like, no, it totally makes sense. I don't see any flaws there. So congrats on that. Very little criticism.
Yeah, it's kind of been that way. I think just because it leans into all the things that people love about HEX, like it's trustless, can't be stopped. The code just does what it says. Launched as like a fully complete product, so it has a lot of that going for it. The only reasons I ever really heard people against it were like, oh, like I don't need to get that extra amount, and it's like, okay, like totally your choice. And so overall, there seemed to be pretty widespread support, of the concept, and then I think just the performance afterwards, how the market almost immediately started pricing in future performance. That was a really positive user experience for everyone who participated too. So even through the bear market that we've been experiencing, MAXI's kind of helped pad those losses. Had you just held the HEX, you'd have been down really big. But if you had minted MAXI at that time, depending on what price you minted it, you're either, break even, a little bit up. Some people, if they bought their HEX on the last day of minting and then minted, they're down. But, most people that minted MAXI actually had a really positive experience. So I think there's a couple of reasons why it seems that everyone is kind of used it in positive light.
I was thinking that this morning, actually. I was thinking, man, it's I wonder how many people are thinking Maximus is like the decorrelated asset or the safe haven for HEX when HEX is going down. That's like a legit thought in people's minds.
Yeah, that's a good way to put it, because it's just kind of how people who are staked 15 years don't care about the price. It kind of gives you that still, like, you can always fall back on that. Like if price is down, you're just like, okay, well, I can still redeem this for probably 5-6 HEX per MAXI in 15 years. Like, I'm fine with sitting through this downturn. But then on the other hand, if price is pumping and you have the option to sell some, you can get that too. So it's like, it helps you on the, like in a raging bull market, it has its benefits, but then in like a brutal bear market, you can still kind of like rationalize it to yourself by being like, okay, well, like, is redemption, like, what am I really holding here? Like, this is redeemable for those HEX in the future. I'm fine with the price not being high today because, maybe I can, sell something else. And so, it kind of helps.
Yeah. And we'll get into Maximus 101 too, but it's, I mean, when I even think about it, I think audited contract, all these things, assuming the contract works fine, it is another contract that's not HEX. I can't think of the constructive criticism to even like to do the risk analysis. I can't, like, what is, if it is a derivative of HEX in 15 years in a very, very simple way, like the technicals are completely sound. Like, I don't understand why people, I don't know what other criticism that could be. If you trust that it's, that it works correctly, what else is there? I mean, it's pretty simple as far as that goes.
Yeah. And also, because there certainly is, it's whether like just how you measure that risk, like, it comes down to like the audits, like track record of performance, and just like how much, people were willing to price that in. Maybe if there was some way to even further reduce risk, maybe we would have had higher participation, or maybe the price would be higher. So it just kind of all gets reflected in the price, everyone's assessment of that risk. And it seemed like the only real criticism was more centered in kind of like psychological response to like if people were really like emotionally compelled by the message about like delayed gratification as the only way to secure that high yielding stake, then now that there's like the ability to sell your equity in that stake, that kind of there was some contrast with maybe things that they kind of like just internally believed in, but there's kind of like that ethos of it and like how people emotionally approach it, and then there's just like how the software runs and how we interact with it is exactly per the HEX specification. Like HEX was designed to be used in this fashion. Like, that's explains the bigger pays better bonus. It explains why it is like the contract was set up in this way. It could have been designed to not be extensible, where you could have other contracts that are holding and staking HEX. And so we're using HEX exactly as the software was designed to be used. And so when you look at it from that way, it's like we're fully aligned with with like the ethos of HEX and some of those things about like the delayed gratification. That's like messages and like narratives that people kind of congregate around, but that's not necessarily that's it. And it may have been kind of like a design theme, but so like that was like the only kind of criticism was like, oh, this interferes with that delayed gratification culture. But it kind of it doesn't necessarily, because it's like still you're delaying, like someone's going to end up with those HEX. And
I mean, if I had to do like one sentence, it'd be like making it frictionless to do a maximum stake and get liquidity in the meantime. One sentence, Maximus, agree?
Yeah, that's a a really
and it's for the counter argument for that as well.
Yeah, but yeah, I mean, overall, I'm really happy that so many people have had such an awesome time. It was an awesome experience rolling that out. Because I've been a software developer for years, and then always wanting to build contracts, and so but never really just had kind of that idea to really kind of get me going on it. And so now that and Maximus really was that like idea that really kind of had me just like apply everything that I know from software development to building that contract, and then everything I know about HEX and all that stuff. So it was a really awesome experience just like building that, because that really kind of like showed me what kind of what the future could be, now that like I understand what it's like to build things like this, and now it's like that like this Maximo, that was kind of like the practice one. That was like the first thing that I knew that I could deliver real value for, and it really opened up a whole other realm of things that can be like layered on top of MAXI, used with MAXI, just or just in general the concept of pooled staking and these like income distribution tokens. That it really opened up a whole lot of things, and since MAXI is like a complete product, it's like it's like that's kind of the beautiful thing about it, is because like there's really nothing I can continue building on top of MAXI. Like, yeah, we can make our dashboards better, add better stuff, and but as far as there's kind of like open open opportunity. And so I'm really glad that this was received so well, and so many people are looking for the future of MAXI, because that's really what we want to be creating.
I mean, that's what I want to dig into too. I mean, your background as far as, being a software developer, getting into crypto. Yeah, can you just give us a rundown, and we'll get into to MAXI too, because I have plenty of questions on that. I'm sure Chad does too. But just, who are you? Where'd you come from? You delivered this beautiful product. Like, what is your background? How did you get in? How did you find Richard, HEX, and then how did that lead to Maximus?
Yeah, I mean, so growing up, I always liked math. Like I've always been, doing these like math workbooks. Like I really just loved it. Was never really that good at school until I got to college. And then in college, I studied optical engineering. And so that was pretty much like a physics and a computer science degree, even though I barely learned how to code. Like there's very little coding at all. Like I did not learn much until after college in that sense. But, so I was kind of going down the route of, kind of more being like an optical engineer. So I was thinking that I was going to go work at Apple and work on their camera system or something, like their 3D camera. So I was doing like 3D imaging stuff. So I was kind of in that world in college. And then during my last year, I started my own startup. And so where I was, I made a 3D camera and a virtual reality app that you could like share photos and videos on. And so, and that was Golke and I, we've been best friends since we were children. But then that VR startup is the first thing that we worked on together. And so I kind of just like stopped going down the route of being an optical engineer, and then started working at like, either building my own or working at early stage startups. So, I kind of always been interested in like, math, science. And then only recently did I get interested in like the finance aspect of it. When that first startup we were working on, we got funded from a crypto company. And so we were getting paid in their token throughout. It was like an ICO called Simple Token. And we were getting paid in their token to try to build on top of their platform. And so it was kind of like a developer grant that we got from this ICO. And that was like my first, and that was 2018 through 2019. So that was like
a good story about ICOs. I like it.
Yeah. And that was what got me into all this in the first place. And then when I was just like learning how to manage those funds that were like for our startup, that was when I started learning, like watching Richard Heart videos. And so I'm just kind of like a long time Richard Heart YouTube subscriber. And so when he started working on his coins, I was kind of just like, there learning about it. And then, kind of been trying to contribute to HEX as much as I can, since then. So it's kind of what.
Yeah, in the same boat. I found Richard, early YouTube subscriber, and then I found out about we're gonna make a CFD token, Bitcoin HEX, and then HEX, and I'm like, yeah, I like this guy. Whatever he does, it's probably gonna be good. And it's in the same boat. Yeah,
it was really cool to see like that whole progression of where he was building that other thing, and then just like having what I really respect about watching that was seeing him have the awareness that it wasn't going to work out and that it might not have been successful, and then pivoting the idea and then arriving at something completely different, but then like that actually had like serious product market fit. And so that, why
CFD token stopped? I always tell the story of like, I just remember he just stopped talking about it. Did he?
Yeah.
Did I not remember some nuance around
too hard? He said it was just like too hard, and because I think the whole premise was they were building a new type of like mining algorithm where if you ran computational fluid dynamics modeling software, that you could earn this token. And so
wasn't Folding at Home? That was another one that did like scientific stuff as a token, right? Folding at Home, a few of them, I believe.
Yeah, I don't know, but the reason why I thought that he moved on from that original idea was because like you don't buy a coin because of like how it was used, like how it was mined. Like that's kind of a secondary thing. And so that wouldn't like, so I didn't see there being like any crazy like pumpamentals with that, I guess. And so I think that he recognized that it would be like a very hard thing to market and promote because like it doesn't, like it's so far removed from anything that like people experience in their real life and
or care about.
And so I think that's why he kind of moved on from that idea and then I think Bitcoin HEX was actually just supposed to be like a pretty much like a copy of Bitcoin on HEX or on Ethereum, just like pure, like kind of how Bcash was a fork, that like independent fork. I think it was supposed to be like an independent fork of Bitcoin running on Ethereum, and then kind of from there, because I think that was the origination of the Bitcoin free claim. Like that was like the initial supply, but then like all the bonuses and then all the staking, like those were things like layered into that. And so then it kind of stopped being like, you know, marketed as like Bitcoin related at all. Like when it went from Bitcoin HEX to just HEX.
Wow. See, I was missing that part. I could not tell that. I'm so glad to hear this. Yes, but continue.
Yeah. So that's that was kind of how it progressed from CFD to Bitcoin HEX to then HEX, where it's just kind of its own thing. And then, yeah, so it's, you know, just seeing that whole progression, you know, especially because, you know, I'm an entrepreneur, you know, I work at like, you know, early stage startups and, you know, building things like that. That's like an awesome lesson to be watching, like someone in real time, you know, at top of their game, you know, building something with such high impact, like just seeing that whole thing, like it you know, it shows people like me and hopefully a lot of people also watching that like it can be done. This stuff isn't like you can create stuff, and so that's what I really appreciated about watching him kind of build everything in public that way.
Do you think, and I talked about this on a couple of streams ago, but do you think if he would have did CFD token, would HEX have came around, or would it be?
I don't know, honestly. I think that it would have. I mean, maybe because, you know, he probably wouldn't have given up. But I don't know. I mean, you know, if CFD, what if it was like a raging success? Then like maybe kind of that concept, you know, or maybe it would have, you know, opened up other opportunities. But yeah, who knows? That's a good question.
I would speculate that I could see him doing it and like getting and like launching it, but then it kind of like, you know, just kind of meandering around a little bit. Some people are interested. He starts trying to sign up, you know, universities or something like that. And he starts that marketing, and he's like, oh, okay, going to do another coin. And then he kind of like PulseChain, you know, PulseX, all this stuff. And then maybe HEX had some flavor of pumping CFD token. And it was like the origin, but now HEX is the new exciting product. I could see that too.
Yeah. But, I don't know how invested he was in this whole CFD concept. I think someone else was actually leading the like CFD side of it. And I think he was like
the scientist, right? The David something.
Yeah. And then also, you know, even before he had kind of thrown around some other types of like either scaling ideas for Bitcoin. I remember something. I don't remember. Someone will have to find this in a stream. I remember he recommended a geographic based Bitcoin scaling solution where there's like a fork of Bitcoin running in Europe, one in Asia, one in US, one in South America, and then periodically they all sync up, but like kind of four independent side chains all running Bitcoin kind of in unison. And so I remember him saying kind of all kinds of stuff like that. So who knows what else he could have created. But wow. I remember that in particular, the geographic sharding that I think I heard him say once, and I don't think I ever heard him talk about it again. But that
and that was before timestamps on those videos.
But that's
I don't know how we're going to find that because there's no timestamps on those little videos, I don't think, unless somebody went back and did them. Wow. Yeah. And imagine how many proof of concepts are just lying around on those hard drives. And there's probably maybe the original POC CFD code, the original, maybe the sharding ideally has a bunch of notes he's never released. Like just get it. Yeah. That'd be cool just to get a glimpse of like a screenshot of Richard's, file system to see like what he's got lying around that comes out of his brain. It was just fascinating.
Louis Vuitton invoices.
Yeah, it's mostly just fashion stuff right now. All the invoices and
biggest diamond ever.
Yeah, he's probably just
Arby's. I remember saying like his favorite restaurant's Arby's.
Oh yeah.
27 million to charity.
27 million for Arby's. Yeah, that's fly on the wall. So Maximus 101, like what is Maximus? Like how did you do it? Like how long did it take? Like what kind of process did you go through? Was there a Maximus V0 that never made it? No.
So so I guess to introduce it all, Maximus is a coin that's backed by a single giant max length hex stake. There was a minting phase from April 15th to May 1st, where anybody could mint one MAXI per one HEX that was deposited into the smart contract. And then the smart contract entered all of the HEX into a single max length stake. It was the 5th largest max length stake ever. 294 million HEX was pooled into the stake and then staked. And then the token MAXI is fully liquid at all times. It's fixed in supply, and so it trades on the market. And so we've seen it pretty much right away. We saw it run from the 1-to-1 minting rate. I think the all-time high was something around like 1.8 premium of like where MAXI was, it cost 1.8 HEX to buy one MAXI. Now it's about 1.5 something. And so we've seen like a lot of volatility in the price of MAXI relative to HEX. And so what that is the market is measuring the future value of MAXI, because at the end that MAXI is redeemable for so it's always backed by one HEX plus all the interest that it earns and all the hedgerin that it earns. So that single MAXI is then going to be redeemable for who knows how many HEX and hedgerin in 15 years when the stake ends. And so it's been really exciting to watch on the price chart how the market is pricing in. It's pricing in all the future benefits, it's discounting all the future risks, and it's kind of been a beautiful thing to watch. So this MAXI contract was a single stake, a single minting phase, and a single staking. And yes, how long it took to build. I've been trying to build this concept since about September.
September 2021.
Yeah. And then I originally, I guess, so the original idea came like where I actually kind of verbalized it on a stream with Crypto Coffee in like November of 2020 or December of 2020. It was like right after Big Payday, where we were talking about the concept of encapsulating stakes, like having a smart contract that could like stake HEX and issue a coin that's backed by the stake. So kind of started thinking about the idea then. And then in like April or May, me and one of my friends who's a developer, we tried to do something. We didn't make much progress, and we just started needing to focus on real work at that time. And so we kind of toyed around with the idea in April, then kind of just like sat around, didn't do anything on it. And then in September and like October I started learning more about DAOs, and I saw that like how a DAO, like through a DAO, you could effectively hold a wallet that is not controlled by any one person, but the token is redeemable for what's held in that contract. And so I started experimenting with different DAO creation platforms that let you, have people mint tokens by depositing funds into the DAO. You can run a wallet that's like you can run functions on behalf of the contract. So there's all kinds of things like that I'd experimented with and done some stuff on testnet. And the original one that there were 4 people that were in the Telegram chat at the time that helped test this idea that never really came to light because it required too much trust and it was like a big pain in the ass, like very difficult to do, and had unknown risks because I was using this platform that I had no idea what it was doing. So that was the kind of V1 that never made it, was this like actual like formal DAO structure that had like that pretty much like required like voting to execute any of the actions. Like it was kind of this whole thing. Tested that out. It was just too hard and required too much trust. And then so then I was like, okay, well, I might as well just like learn some Solidity and see if I can just like do this in Solidity. And then so starting in like November, I started trying to learn Solidity and then really picked it up after the new year. And then had a contract that on testnet that was doing staking sometime in like March was when I was first able to kind of get that staking mechanism down. And then about a month and a half of iteration to get it to like the final version, which contained hedgerin minting. It had fixed some things that the auditors pointed out about how we were calculating the redemption rates. And so there are some things that we fixed and optimized towards the end. And so it's
what
kind
was
of
the audit process like? I'm curious about that too. Like what does it take to get a smart contract audited, especially
so
like
there's a bunch of firms that do audits, and it all just starts by you just sending them a message that either has like your code or has something that the scope of what you need. And so we didn't start talking to the auditors until the contract was complete. And so usually, like most of the these audit firms were fairly booked up for large projects. So it's very hard to get like an audit that's large in scope and scale. But since ours is just like it was like a single file. It had about 150 lines of like actual code. It used the default Open Zeppelin. It's called Open Zeppelin. It's like a library of pre-audited contracts that you can use as building blocks for your contract. So
Nice.
we didn't do anything out of the ordinary, and there wasn't any type of like integration with other markets or any type of like all this stuff that causes contracts to fail. Like there really wasn't anything. It was like clear cut, like minting and redemption, and then the staking actions. And so because our contract was so limited in scope, it really only took about like 2 weeks to get the audit from start to finish. And so so we experienced like kind of a fast track that on that, and we got audited twice. I did one audit, had the responses, got the response, fixed that, and then with that contract that was then fixed, we took to a different firm and then did 2 audits. So so almost like I wanted to like audit the audit in effect. And so so because there are 2 firms that I had chosen as ones that I researched a bunch of firms, saw which ones there were some that were booked that I didn't even couldn't even gotten anything for months, but there's some others that had a lot of experience, and some of their past work I saw was somewhat related. And so those 2 firms were the ones that I chose. It was called Solidity Finance, and then it's called like Interfi Network. So those are the 2 audit firms, and then they all I did is I just sent them the GitHub link that had the contract, and then they run it through these various tests, and then they do like kind of like code review, and then they tell you what's wrong with it and what you need to fix, and like they rank them as based on how critical the fix is. And none of the things they flagged were like critical things. They were kind of optional to fix. Mainly they were to save gas for the user. So we fixed everything that the auditors told us to fix, and then it was go time from there. So it was kind of
I'm always curious too, like what was your motivation for creating MAXI? Were you just like, I want to do a crypto project, I see all these people doing it, I'm smart, I can do it, or was it like, whoa, I can get really rich doing this? Like, I'm just curious, like what makes people create products like this when you have an idea? For me, I have an idea. I've been working in tech for a long time. So for me, it's like, I know how to code. I'll just go do it, and I'll just go do a POC. And then if it's good, it's good. If not, I'll do another iteration, or it may just be something I never touch again. But I'm just always curious, like what makes you create products like this?
Yeah. So I guess it was neither of those 2 things, because there's no pre-mine in MAXI, so I didn't get any money. I didn't make any money doing this. I only spent money, and
you get a lot of respect for that too.
Pre-mine MAXI has appreciated, but I certainly don't have anywhere near the largest position in MAXI. So like as far as getting that wasn't part of this contract, but and it wasn't because so many other people were creating stuff either. It was actually because I had started thinking about this problem when the gas fees started getting really high. And then when EIP 2929 came out last year, and it 3x the cost of ending of gas to end.
Everybody remembers that.
And then when I understood that the longer stakes cost more to end stake, because you have to calculate that interest over a longer time frame. So when
that's something nobody talks about. If you got a 15-year stake,
like,
it's going to cost you bank to unstake it later on because of, and why technically does that happen?
It's because the way that it calculates the interest when you end your stake is it looks at the daily payout per T-share for every single day. So it loops through 5,555 times, reads a value, adds it, reads a value, adds it. And the act of reading that value was suddenly made 3 times as expensive in a recent Ethereum upgrade. And so
more days, more reads, more gas.
Yeah. times 3, it was like 2.6 for like what that change had. So that was like the big motivation, was when I realized that, and at the same, and kind of something that even further added the urgencies. Another thing that I built was the MaxLink stake bot, which is a Twitter bot that's probably down now because I run into my monthly limits all the time. And so it'll shut off periodically at the end of the month. But because my account has limits, but that bot tweets every time someone MaxLink stakes, and then every day it gives a report on like that day's. And almost every day that I look at it, when I look at that median, I'm like, okay, in order for that stake to be feasible to end stake, that requires HEX to go up versus Ethereum probably like 1,000x for, which can happen, absolutely can happen.
So you're saying there's a chance?
Yeah, well, so that may even be kind of like, well, this whole act of many stakes not being feasible to end could send the price that high, because there's a bunch of staked HEX that may not ever be able to become unstaked. And so all that does,
I like how that's a pumpamental, like an incidental pumpamental.
Yeah, like a lot of the small stakes may be infeasible to end, and so those are HEX that were previously the market is like pricing in that they were going to exist in the future. Now because the HEX that then bleeds out, it's then like bleeding out over the next 15 years. And so because of just how the penalties like bleed out and get reallocated to new shareholders. And so the long-term HEX, it just like even further decreases the like circulating supply inflation. And so that can really drive the price up. Also at the same time, if your gas is really high, you have to pay the gas in ETH. There could be a chance that you get more HEX with that same amount of ETH by just buying HEX. And so, that's like a new class of buyers who maybe they still demand that HEX, maybe they still want the HEX, but rather than paying a bunch of gas to only get this much HEX back from their own stake, they could, especially if it's in a price dip, which would even further make it unfeasible to end, you could just buy more HEX with that ETH. And so, there's, it is a serious pumpamental, but just knowing that, like, because pretty much after Big Payday, it started becoming clear that the gas was becoming really expensive. So I pretty much told all the people that I personally onboarded, I pretty much just said, honestly, just don't stake your HEX. Like, you just wait, because you at the time, after Big Payday, stakes could be earning somewhere around, like, MaxLink stake could be earning like about 30%. The 38% that's kind of listed that includes pre-Big Payday. That's like the average right now, which contains a lot of stakes from when the share rate was much lower. And so the actual earning potential of a MaxLink stake for just a regular person is about 30% APY. And so what I was telling people is like, okay, well, like, the price moves 30% in a day. Like, rather than, kind of like waiting for 15 years to kind of realize that 30% APY per year, why don't you just look for times of like sheer exuberance and then just maybe break off some of your HEX and sell into that, as opposed to paying all this gas to be staking. And so I'd already kind of been telling people that like, and I made a whole video on this on my YouTube. Like, there's a video on my channel, I think, made in like early 2021. And the subject is, what is the minimum viable HEX stake? Like, what is where it just helps you calculate what is like the minimum length and size that's like reasonable based on your estimation of what happens in the future to being feasible to perform. And so, I kind of always been thinking about this topic. And then that's really what drove me to make Maximus, was gas fee savings, because rather than everybody running that same calculation over and over and over again, then you just run the calculation once, and that calculates everyone's interest that participated who's redeeming. And so it just, it's like and also every user, the kind of the way the DAO works, no individual is liable for paying anything for to end the stake. There's like, when it's ready to end, anybody can pay the gas to end the stake. And there's no like guarantee that anyone pools funds. The contract was set up it records who ends it. So somebody else could build a contract that pools funds that reimburses the gas payer of the end stake. But but like that would be fully voluntary opt-in. And so nobody, like, so if you don't want to pay gas to end the stake, you don't have to pay any gas at all. So for that class of user, it's like 100% gas savings. You know, you're not paying gas to end stake.
What is this, socialism?
Well, no, someone pays it. It's, you know, and then only if they're so incentivized, you know, so that could be just like, you know, maybe the largest MAXI holder, you know, that gas fee is nothing to them. Maybe they just pay it and then, you know, don't expect anything. Or maybe, you know, it's been like a couple days after end stake, no one's done it yet. So people deploy a contract where they just like add funds to a pool where the contract is coded to allow the person who pays the gas stake to withdraw it. And so maybe like, you know, people need to raise money to end the stake. Then somebody, what's like the total gas cost minus the amount that they're able to pull from that. Once it reaches some threshold that's acceptable to that person, maybe they'll end it. So, you know,
that's gonna be interesting.
Yeah. So, you know, who knows how that'll play out. But it's kind of, you know, it's set up to like naturally just solve for that, where, you know, it records who did it so that another smart contract could trustlessly pool a gas pool. And no one, it's like no individual is responsible for it. And so it does like gas savings too.
You're not the only one who got tired of gas and created a new project to fix that. PulseChain.com.
Yeah. And, you know, and honestly, kind of the way that we approached it, like, it's like the way that all this is maximized is if like Ethereum and PulseChain are kind of like a super pair where they're like two layer ones that work independently of each other. And because the assets are like copied and then they're going to be bonded through the PulseX liquidity pools, it actually makes it kind of like this like dual lane powerhouse. And if assets on both sides are valuable and there's like active trading between them, like that more than just like even though it's like doubled, you're like, you know, it's like everyone gets the copy. So it's like as if no one gets it, but it's not just things are like double. It's like almost like it's squared. And so you can like having both of them. And so optimizing for the HEX that's operating on Ethereum and the HEX on PulseChain, like that's like the force multiplying effect, because the whole problem of high gas fees, it's actually a good thing. Like you want if you're holding assets that you're executing a 15-year strategy on, you want that blockchain to be permanent. And the only signal that it will ever exist tomorrow are the people who are operating the network, are they getting paid for it? And the more they earn, the more competitive it is, the more likely it is to exist in the future. So if you want PulseChain to even be around in 15 years, you should be expecting to pay high gas fees. And, you know, maybe that gets mitigated with certain things. And then, you know, it's really, I think it's really down to like the application developers to provide kind of like that, like per user scaling. And that's kind of what we did with MAXI, where it's like on like a per user basis, we're like scaling HEX because, you know, we got 5,300 people to be minting MAXI instead of staking HEX on their own. And so now HEX is going to be using a lot less gas. And what that translates into is less money that's being extracted from our economy and getting paid to the miners or the validators or whomever you're paying for that block space from. And so like that, so, you know, we it's like everything we do on Ethereum, it'll, even if like the problem of gas isn't so high on PulseChain, like that high gas fee, that's just one of the benefits. And so, and, you know, we're preparing for a situation where one of the most lucrative jobs in the world is being a PulseChain validator. Like, isn't that the, like, if you want PulseChain to go 10,000x, millionx, operating that should be massively lucrative. And that means high fees for users. And then from there, it's just like, you know, using products that help bundle things, you know, remove like things where you can trade some risk for some fees, like things like that enable these things to scale. I think a lot of that can happen at like the application layer, like kind of how
the fees are going to be free at first, right?
Yeah, because
until the network becomes valuable and all this stuff. Yeah. Wait, let's say hi to the chat real quick. We have a few questions too. Benchwarmer, Bullish OX, appreciate it. Briskology, Jen Hex, Bobby Axelrod. We are going to get down the list. Hope you like that MAXI explanation, because that was deep, and I learned like a handful of things myself right there that I didn't even think about, especially on the PulseChain remarks.
Yeah, sorry, that wasn't like 101. I cut right into like.
Oh, you did 101. You just did like
PhD.
202 and 303 and 304 right there too.
Yeah.
But it's no, that's hey, we're educating people. This is what we're supposed to do. But learning is painful. It's supposed to be. It's not supposed to be. You're not supposed to be comfortable and happy all the time. You gotta make that brain work a little bit. HEX says, do you plan a new version of MAXI in the future? It's something I was going to ask you about as well. I think some tweets have kind of hinted around on it. Is there something else in the works?
So I'll just say that there's clear demand for this type of stake pooling, and seeing how just like how it worked, and kind of how the market responded, and just also how people like emotionally responded to it. That gave us a lot of clear-cut ideas of what to roll out next. And now that we've kind of like, have this, it's like now we have this like audited pooling contract to kind of work on. So, so there's certainly more pooling as far. And so kind of where we plan to diversify, like, I said this in a tweet that, I'm not going to say it because just to be fair to everybody that's going to be participating, it's all the information is going to come out at once about like exactly how everything's going to work. And also there should be no expectation that this ever happens at all. Like the default assumption is that, I'm just going to go and, go just,
you're going on vacation soon
on Twitter for the rest of my life and never produce anything. Like that's the default assumption.
No expectations, everyone.
The areas that I'm interested in are, different types of staking strategies. So, things where, because like this single max length stake, that's just one particular staking strategy. So other like strategies and dynamics, in that like stake pooling concept is big. That's something that I'm really interested in. We're probably the first thing isn't going to be just like another carbon copy of the max length stake. Not yet. There's a lot of other big things that we can do, and so the next thing that is like the next version of the stake pool. The way I view this is that this is going to be the foundation for all future HEX stake pools that Maximus creates. So this one right here is going to be kind of like the backbone of all of them. And it has dynamics built in that incentivize people to organize outreach efforts and to keep this movement going, where even, if I stop, it's like there's always an incentive for someone else to keep it moving. That's kind of, so the next kind of pooling thing is certainly going to be kind of like the bedrock of like kind of future pooling plans. And then, having these dynamics that like incentivize that, like, people to have skin in the game wanting to push this thing forward.
And are you thinking like would be trading HEX for it in a DAO like or a sacrifice? Have you thought anything about that yet?
So it will certainly not. It won't be a sacrifice, and we're So there's not going to be what we will not use the word sacrifice.
Okay.
And then as far as how it like the launch, the only thing that I will say right now is that that the only way to like you'll need MAXI to participate. You won't need, you'll need HEX to if you're going to join this next pool, like the HEX staking pool, that's going to be like the bedrock of like everything else that bedrock of like a MAXI, the current MAXI and bedrock of future pools.
Okay.
You'll HEX for joining that pool, but kind of like this this layer of like getting the community involved, and I think that's what you mentioned it's what I mentioned in a tweet about, like, who wants to join a team. That one you'll need MAXI to join that, but then for like the pool that's kind of related to, you'll need HEX. And
okay.
yeah, but
Are there? I don't want to press you too far for details. I'm just thinking, like, is there an incentive? Is it just the gas fee savings that you would want to stake in this kind of pool versus stake in the HEX portal, for example? Like, what would be the benefits?
Yeah, so gas fee savings is always a benefit, and then also the like liquidity options that you have. To either like sell if you need to, or just like, and also just like gaining like the exposure to like the bonuses, like that's all upside for you especially as a small staker, and then also just unforeseen craziness that could happen, that either suddenly causes like massive demand on the coin, or something that causes it to be burnt. Unpredictable gifts from the universe like that.
I like the game theory.
Things like that are the reasons to hold these.
Dude, that's exciting. I think this year it's going to be super. Oh, we have Pulse. It's. I'm just going to say it's coming out this year. It's coming out this year. I think this summer even, but it's definitely going to be this year. There's no way it waits any longer. And then we got.
I don't know. I think could benefit from wait. Like, I think PulseChain could even wait until the next ETH cycle, like until there's really not.
What's your case for that? What's your case for waiting until? Didn't you mention something about the Ethereum merge coming up, right?
Yeah. So I do think it will be relatively soon, but also like I don't think there's so much more downside for rushing it than the upside gained by even like timing like the market cycles. I think that there's limited upside in that, whereas like there's infinite downside to rushing it. So like probably the people that are mainly pushing for it to be rushed are those that sacrificed most of their liquid HEX.
They're broke right now.
And then the liquid HEX that they did keep, they expected it to be higher priced right now.
Yeah.
So there is a large cohort of users that are really pushing for that. And so, people from that perspective, if that's you, like you want PulseChain to launch immediately. But but like me, since, I'm interested in like building things on PulseChain and also kind of this like dual chain, cause like in which we haven't even talked about the copy of MAXI and Pulse, and more time, this next thing is potentially can be rolled out before Pulse as well. Most of the
okay, so you got some interest there too. So that may be
so like, which I didn't expect to. I was expecting to kind of have to launch both simultaneously, and then they'd be separate. But now there's a chance that this and so since I'm interested in kind of like building on this like kind of cross-chain compatibility.
You want a copy of the new coin potentially?
Yeah, and just in general, like the whole concept of like how PulseChain to me is like a market-based scaling solution, where it's like a carbon copy of Ethereum. So it just has that like basic, like there's more supply of blocks. And since the coins are linked by a market, you can effectively like bridge over and trade and then do some operation here and then bridge back, then trade and then bridge back over. And then it's like, rather than like, in Polygon, it's like you like lock your coins and it pretty much like issues like a new version. It's like a wrapped version. Yeah. And then maybe there's like counterparty risk with who's maintaining that and who knows what other types of risks. Now it's like there's a token and then you're trading it. And so that's the only link between the two chains. It's not like collateralized. It's just like market driven. I think that's a really awesome scaling solution for Ethereum, where like both of them can kind of work in tandem and they're linked together by the software being runnable, same contract on both chains. Right. They're independent, but like you can run things on either and then settle amongst each other because they're kind of linked by the market. So I think that like compared to other types of scaling solutions, PulseChain is like a market driven scaling solution. And to me, anything that's like driven by supply and demand and like those incentives, like that has a chance. And so So like, so because I care about like this type of scaling solution, I'm in absolutely no rush for PulseChain at all. Like I want it to be, really, really effective, from the start. And,
but let's say the bugs are fixed though. Let's say that, it's not rushed. It just, the bugs, everything gets fixed within 3 weeks, for example. It launches late June. Is there a benefit in launching in June versus launching in August or September?
I mean, probably
if everything's good.
If it's that short of a time difference, like there's really like, because who knows what the price, because it's really like what the prices of everything else relative to it that it's going to be benchmarked against at that time of launch. And so, who knows what can happen to the prices of other benchmarks in that period of time. So like that little like window of time, I don't think is a big difference. But I do think that like, because between 1 and 3 months, it's probably going to be similar market to what it is today. Whereas in 1 to 4 years, it could be very different. And so I think launching during a bear market is like, that's why HEX was, I think, so good, because it was kind of on the tail end of a bear market where like it had already, leading up to the launch, it had already, it had ran from, in the months leading up to HEX launch, Bitcoin had ran from $3,000 to like, whatever it was, like 12,000. And then like by the time HEX launched, it was at like 9,000 or so. And so Bitcoin, so that was like kind of the tail end of that bear market. And, had it launched anywhere in the 3 months before that, what difference would it have made? It's all kind of within that possible range. So, I do think that at the bottom of like a big cycle down, yes, is better than launching at cycle high. So for that reason, you don't want it to be delayed, for too long. But, also like, it's like, if it's going to be around forever, what do you need to rush the launch of it for?
The people want it.
Yeah.
So I get the technical arguments for sure. For me, it's like, it'd be nice. But when you see, it just seems like the hate and vitriol keeps compounding each 2 more weeks, or each, oh shit, bugs to fix. Not going to launch this month. Every time that happens, it just seems like he gets 500 more comments of,
every time he delays it, he gains respect from me. Like that's
you're a different animal though. You're a different animal. I totally see that too. But I don't think the majority of users quite feel that way, because I think a lot of them are broke. I think a lot of them sacked so hard. They're like, we thought we were going to get coins, before PulseX launched, and then we knew we were going to get coins in March or April, and then May, and then you're like, oh, bugs, and that happens. And I was just looking just to get people on the HEX price too. I was looking historically when it first launched. I think according to that, I was looking at HEX daily stats on their columns and stuff. And I think when it launched on day one, started trading. It was like 0.003, and then it got sold down so hard. It went down to like 0.0006 or something like that. That was
it's like a 98% bear market.
Oh my gosh! It was just like, crazy.
It's funny when like, because it's like the perpetual journey of these hype cycles that build up these coins, where it's like, but
it dumped even at that cheap. It dumped like crazy the first week or two.
Make the high, and then like when prices kind of turn around because previous people selling and then the new people cutting losses, like, and that causes the bear market. It's like, there's like that. There's like this whole cycle, and it happens all the time. And I think in HEX, there's been like 10, 60 plus bear markets. But that first one, that was like, the people that feel like when they look at that chart today, like people that bought in September and look at that chart, and then that pain that they feel today, they should consider
go away once you see that.
The person who bought HEX on day one, and then during peak FUD of everyone saying HEX is a scam, sitting through it, bleeding out 99% in the first month. Like,
I think very few people did that.
Different, because like there was at that time there was no history to look back on. Like, oh yeah, this is a strong thing, it's coming back. Like,
I remember when it was.
You have the chart now. You have a lot of history and track record of like, oh, this regularly comes back from these types of selling cycles. And so it all comes down to every person has their own perspective on what's going on. Yeah. And that and so we see the whole gamut kind of unfold of like, some people that don't really care, some people that like are in big trouble because the price isn't high.
Yeah. Well, I remember seeing it. I forget what centralized exchange it was on in the early days. It was really bad though. I forget which one it was, but I remember seeing it. It's like 1 sat, and I was like, man, is this thing ever going to go past? I remember Richard tweeting, like, he was not pumping it like he does today. He was not like this huge ball of confidence. It was like, yeah, we'll see what happens. And I was like, man, is this thing going to ever break 2 sats? And then it went from 2 to 3, and I was like, oh my God, it went from 2 to 3. That's crazy. And then went 6 and 9 sats. And I'm like, well, okay, I think people are starting to get into this thing. But I remember looking at the terminal, you're thinking, do I buy or do I sell? And what's going on at like 1 or 2 or 3 sats? And today it seems so insane, but that happened. Like that's how these things work. They start small and they go up.
Yeah, that was on BuyDesk.
BuyDesk, yeah.
And I remember when
I don't want to talk about exchanges, but man, you all were not super great back then. I'll say that.
Well, I remember when it went below 1 sat, and so you could only see the price quoted in ETH because ETH has more decimals.
I remember that too. I was switching over to ETH. I was looking at the ETH pair too, and I was like, man, this thing is yeah, that's true. I do remember seeing the ETH. I had to switch to the ETH pair because it was like it was 1 sat on the BTC pair, and then on the ETH pair, it was below 1 sat. And I was like, oh my God, what's going on? Is this actually going to work or not? Oh, and that's great. Okay, this question has been there for a long time. We have to get to it before we move on from MAXI. Was it the auditor that added your statement about no admin keys and immutability, MAXI, or was that at your request from Guymon?
So if they're asking about like the thing in the audit that says no admin keys and immutability, they might have pulled that because like when I wrote I pretty much wrote up how it is expected to work, and in there I noted that there's no admin keys and immutability, and then so they included that as like the things that they were checking, and so by being in there, it's like they're confirming that is valid. But the whole thing about like no admin keys and immutability, that was like we went in with that being a requirement for how it was going to be built. Just just knowing the audience, like if this like NFT crowd or like some of these other DeFi crowds, they don't care about no admin keys and they don't care about immutability. Like they want the dev to do something, that whole meme, like dev do something. Like they don't want it to be immutable. But with our audience, like the Mexicans really value immutability and no admin keys. And so that was like from the start had to be done. And then, that was part of why we got the audit, was to like confirm those things to people.
Gotcha. Okay. So HEX, let's switch back to that real quick. Is it dying? Is it a great time to buy or a terrible time to buy? Where's the bottom? What do you think? You said the next 1 to 3 months, you're not sure much is going to change at the macro level, I guess, but what do you think is going to happen?
Yeah, statistically where it's at now, like it's absolutely like in the buy zone. So like I have on one of my websites, dipcatcher.com, I have these email alerts that
everyone's heart stopped when you said that, by the way, and now they're very happy.
Oh, no. So here, I'm just going to pull up the chart. Let's,
because a lot of people, they're saying, 3, 4 cents. I heard 5 cents, 6, 7 cents. And I'm like, I didn't think I'd see it below 10 cents. And now we're at 8.5 or so, maybe 9.
Yeah. Well, it's at 8.2 cents right now. And so kind of where, at least on the chart, the price is about to hit a level. So I have this algorithm called DipCatcher. It powers these email alerts that probably are turned off because they hit the limit every month and I have to like reset it, and I just don't because I don't really care that much.
Doing like AWS free tier?
Yeah, it's like, well, this is a trading view free tier.
Okay.
So on the weekly chart on this, like it's like a modified Bollinger Band. The price is almost at the bottom bands, which on the weekly chart, which it has never gotten anywhere near in history. So partially it's because in the early days, there was just so much volatility that those bands are so big, but it is, this is the closest it's ever been. And it may, So right now, this like lower Bollinger Band is at 6.7 cents, and the current price is 8 cents. So it is way below all long time frame moving averages, and it's approaching these like lower Bollinger Bands that like price should only be there in less than two out of every 100 weeks. The odds of it ever being there is like 1.7% ever. So 1.7 out of 100 weeks would you expect price to be this low. So from that perspective, you know, it's definitely like a buy at any price range. But, you know, also when you just look at the levels, like price virtually went so straight up all of 2021 that it didn't have time to kind of build any market structure. Like it didn't spend any time ranging. And so like the market has very little memory of price at these levels. And so it can always just yoink down because like there's not like a trading history of price at pretty much down until like under 2 cents. And so like, you know, that's like the further risk, but there's also the risk that never comes down. And so I always think that it's much better to just like buy into a dip kind of at any, like, don't try to snipe the bottom. Just make sure you're buying a good dip. You know, it's got to be like, you don't want to be pump chasing. Like sometimes it is advantageous to pump chase, but like you want to be buying painful bear markets. And so like, it's not about like timing it, and you can DCA if you want, or you can just buy and just get it over with. And like, that's your average. It's just like, you could have, you know, like, I think that just taking action when you feel compelled, like when you feel pain, like, you know, when you look at that price chart, like kind of at whatever price, like, you know, you can just enter and not think about it. And, you know, just check to see kind of where it's on. It's like, you want things that are in long-term uptrends, but in serious bear markets. And like, that's like exactly what we have right now on the HEX chart. Like we look at the all-time one, it's like this downturn. It's kind of similar to the bear market that HEX experienced from May of 2020 through like November of 2020. It was pretty much a bear market. And so it's kind of similar time scale there. So like, you know, around this is the time to buy, but you no matter when you're buying ever, you should always assume that it can go down another 99%. Like absolutely, and anything can. Like if big sellers are activated, if just everyone's selling and isn't new buyers, like price can always go lower. But, you know, you just got to be, you know, you want to be right where like at any time that you bought in the 3 months prior, 3 months after, like, you know, you want to just kind of be in a nice spot there. You don't need to like snipe the bottom.
Well, so how much do you think the fundamentals of PulseChain potentially launching in the next few weeks, maybe not, but how much do you think that fundamentals plays into HEX, you know, going higher, going lower? And if a fork date is announced or V3 is announced or whatever, we get some good news from PulseChain, how does that affect HEX?
So I actually think everything related to PulseChain was priced in starting a year ago. Like as soon as like PulseChain kind of launched, like actually
the very typical analysis view, gotcha,
kind of has like already happened. So like I think like the current sell pressure, it's probably only like a small fraction actually related to the PulseChain. You know, it's like other than that, like there's still massive early buyers that just have big profits to take. Maybe they have big living expenses right now, and they got indicate. You know, I think the impact of PulseChain is that like people that would have otherwise held their HEX, but because they aren't expecting the PulseChain to be liquid immediately, and they have big life expenses, big new life expenses in the last year, and prices of everything else are going up. I think that, I mean, still it's just big sellers that take profit, and it doesn't really matter why they sold. It's like, it was their coins, so they can choose to sell at whatever time they want. And so I think that overall has a much bigger impact on the like bear market we've been in. Like it's mainly driven by big early buyers. You know, and then the PulseChain stuff that maybe like amplifies it in both directions. you know, and it impacts how those people are thinking, because it's likely that if you're a big early HEX buyer, you're probably also interested in PulseChain. And so, you know, but and then maybe like, I don't necessarily expect like if like a clear launch date happens, I don't expect much to happen, because it's like by then it's like everyone who has HEX ready to go in is probably already have it, you know. And even if, you know, the people that are rebuying in to get it, it's like, okay, they're being met by those big sellers who now have to, like, rather than selling just their principal, rather than selling just their stake earnings on their big short-term stakes, now they're having to sell some of their principal because the prices are lower. So like, I think that those things are really driving price, and the PulseChain stuff is probably already priced in.
So you think that there will be people who will be buying, once they know a date for Pulse launch, they'll be buying HEX to get PHEX, but they'll be buying into sell pressure from some of the whales.
Yeah, just like existing like baseline sell pressure. You know, those people who are rebuying back in. You know, and then also, because also there's going to be sell pressure after the fork, because like, even though everyone's getting the copy of the HEX, because it's being given to everybody equally, it's like, it's as if nobody's getting it, because it's like everyone's balance appreciated by the same amount. And so like, you didn't gain relative to other people, other HEX people. And so
do you think the ratio trading is going to leave anyone with PHEX anymore? You think they're all going to trade it for Pulse or PulseX?
Wait, what do you mean?
Oh, on the pre-bridge. So for example, if we get a pre-bridge and everything has no value and you're able to trade things based on ratio, do you think a lot of that PHEX is going to go into Pulse, go into PulseX, and like really drive down PX price?
Yeah, so it definitely could, because that at least seems like people's number one way, if they missed out on the PulseChain sacrifice or the PulseX sacrifice, is to get HEX, because they expect it to be a very liquid market right away. So yeah, I mean, that's downwards pressure on the Pulse, or on the HEX Pulse pair, but that only translates to downward price on the USD pair if the people that are selling their PulseChain for that HEX, if those people are turning around and then selling that HEX and cashing out. So like, people swapping their PHEX for Pulse, that alone doesn't move the HEX USD price. It's only like what happened with that HEX next. And so that's, you know, that could, if people, you know, maybe these people that are strapped for cash that are currently selling their HEX, maybe, you know, they are going to be quick to be selling their Pulse on any pump, and then they're, you know, and cashing out. So if that's the case, that could cause downwards pressure on Pulse and on HEX. And yeah. And I think these are like, that's like what you want, as like, because I don't think anyone I know I mean, I don't actually, I take that back. A lot of people way over sacrifice. At least the people that I talk, like the you know, my crowd, they're kind of more on like they look at all things in perspective, and they have good sense for not like putting themselves at risk for big loss they can't recover from, even if the worst thing happened, you know. And the whole premise of dip catcher, like the whole premise is like what to do when price is going down. Like, it's all about handling, because that's when the opportunity is, when the prices are low. And so like these, you know, so like, you know, you want these big dip opportunities, and just the dynamics of how they work, and just like, you know, everyone's living expenses are going up because of inflation. Yeah. Also, people amplified that by, you know, gaining new quality of life. And then maybe their assumptions were that HEX was going to stay at this other level, you know, and so it, like, all those things that factor into like dips, you know, that can cascade into, you know, Pulse, HEX. And so, you know, you want to be ready for those. And hopefully, you know, you weren't, you know, or anybody listening wasn't, you know, overexposed in that, because there certainly is going to be buying opportunities. You know, you never know what price, but like, there are always going to be good relative buying opportunities.
Yeah. I mean, even now, like if you're buying at 8 or 9 cents, like what are you thinking in even next year? Like how long do you think it's going to last, the bear market in general? Like, you have any idea? Like, let's say, you know, the war in Ukraine gets resolved in some way, that the markets go back to normal a little bit, and recession doesn't quite happen. It was just like some pain for a few months, and then I guess I'm painting like one of the best case scenarios for like 2023. But how does HEX, is it decorrelated? Does PulseChain help that? Is it still kind of the status quo? What do you see changing in the next 6 months to a year?
Yeah, I mean, it really comes down to the size of the new people getting onboarded, and how they compare to the large players who have big expenses and big hex bags. And so like, and
more new wells.
Absolutely. And because those are the people that really drive the price. Like the retail adoption is important for kind of like the big, like mass imprint, but the people really driving the price are the people that are, in like the 8 to 10 figure range. And, because it takes how many individuals does it take to add up to like a 10 figure, or that's even absurd, like even like a 7-figure purchaser, like, that could be thousands of people.
Is that a metric we should be looking at? Like how many, like does the number of wells go up in HEX? Is that a metric that would tell us the story?
Yeah. Because like, it's like there's like the current whales, and then as they sell over time, they get recirculated into new people, and then new people can accumulate. And so, I mean, that's like a big metric. And so, and that's really kind of like rooted in like, there was like the gas fee savings aspect of why I wanted to build Maximus, like, because that actually really does help like the retail user. But having this type of like HEX derivative, I think it actually unlocks HEX to a whole other financial use case where, and it expands the financial utility of HEX. And that's really what I think that the like kind of this end, like the value of all of our contributions in the space, I think it really can unlock like that big high finance use case, in HEX where, so that's things like Maximus, I think, have the potential to, like attract that. And, because that's really what causes it to turn. It's like when the people that have HEX to sell at these prices are done selling, and when those get in the hands of people that kind of reset the time horizon, that those HEX go from being in hands where the time horizon is, wow, I have a big payment next month, I need cash today.
A lot of people are in that position.
Circulates from those hands into the hands of someone who's like, okay, I have new cash to deploy. I'm thinking on like a 7 to 15 year time horizon. What am I buying and what am I doing with it? And so like, those buyers, like you want that HEX to change hands from that short time horizon hand into the long time horizon hand. And then only when like more than half of that has happened is kind of when I think it'll turn around. And it's only you only know when it happens once it's happened. But the things to look for are going to be like, if you see like a big like a massive candle, like a huge green candle, like boom, followed by a massive stake. Like those are indicators that, those coins being sold at this price are now in the hands of someone with long-term time horizon. Or, maybe we see a lot of liquid HEX getting gobbled up by these MAXI, these next pools that we roll out. That can have a big impact. And so, overall, but that's just the main thing is if you want the price to go up, then you need to source new demand, and that's just all it is.
Wow. And so PMAXI versus EMAXI, what is there something that changes for the story Maximus on PulseChain?
Not really. Maybe so I actually expect, well, so in general, I think it's seeing that PMAXI EMAXI ratio versus the EHEX PHEX ratio. That in itself will tell a big story, because it is the market telling us how it is valuing staked HEX across the chains versus liquid HEX across the chains, where PHEX, EHEX is liquid HEX, and then PMAXI, EMAXI is the max length staked HEX. And so those will probably trade differently because, EHEX PHEX, like that's deliverable today. You know, you hold it's like you're not earning anything on it. You're, you know, being diluted at 3.69%. You know, relative to the EMAXI PMAXI one, where the underlying, you know, stake is earning on those at like 30%. And you know, it has its own premium where people are pricing in future earnings, pricing in the benefits, and then like discounting the risks. And so maybe what you see there is that the market may demand EMAXI more than PMAXI slightly because there is perceived to be higher gas costs on Ethereum. So the benefit of pooling the gas cost is higher on Ethereum than PulseChain. So maybe in that setting, you see, you know, a little bit of like whatever the EHEX PX pair is, the EMAXI PMAXI one is just like a little bit weighted higher on the E side of it because people value that gas.
Interesting.
So maybe that's factored in there. Also, it's like, you know, like betting on like the certainty that the network will exist in the future, you know, like that's what gives PulseChain such high price potential, is that there's serious risk that PulseChain is not around forever. Something could break. So that future potential of like it going away, that's what gasses up the potential for 100x gains. Like you can only experience 10,000x, 100,000x gains if there's serious risk that it goes away. If there's no risk that it's
like
going to
Ethereum,
maybe the gains are capped to like 100x, 1,000x, which is still awesome. Still can be life-changing performance, but like for those 10,000x, 100,000x gains that it can't have, like any new thing, you know, can't have it. So like, you know, there certainly is risk involved.
Interesting point.
And, you know, and that's like the best part. Like if it wouldn't be exciting if there was not that high flying risk. And so maybe the market, because like, you know, the EMAXI, PMAXI, its value is derived in action that it's going to take in 15 years. Maybe the market's going to price in some of that risk of, you know, cause like, there's not much like risk of like EHEX, PX. There's not much risk of like long-term it going away because it's like the short-term liquid HEX deliverable on demand versus like the EMAXI, PMAXI, it's like a receipt to HEX deliverable in 15 years. You know, there's a lot more sensitivity around that type of like big systemic risk. So maybe that's baked into that.
That's interesting.
Yeah, that as well.
Well, I mean, it is. I mean, so with PMAXI, it's not, you're not getting the benefit of the low. I mean, I don't know. In 15 years, let's say PulseChain is still around, kicking ass. What if gas goes up to Ethereum prices, or Ethereum gas is insane, just like 10 times what it is now, and PulseChain is what Ethereum prices are today?
Yeah, and that's reasonable to expect, because if you expect, you know, the blockchains in general to gain users, it's like, you know, most of the recent gas, it's like when HEX launched, gas cost nothing because there was no one using Ethereum. It was a ghost town. HEX was the number one user of Ethereum for like much of 2019 to 2020, like early 2020. And then HEX was the first major use case of Uniswap. And then after, and it was the first major yield farm, major yield producing asset. So like it was the first of all these things that then caused like a huge.
No. BitConnect was the first yield farming asset.
Yeah. Other than on Ethereum, the things driving
that's true,
on Ethereum price, which maybe, I don't know, was BitConnect the ERC20? I don't even know. Maybe
I don't think it was back then. I think everything was their own chain. Pretty much.
Yeah. That was that back then when that was the case. But yeah, I mean, you know, all these things that like HEX paved the way when gas cost nothing because there were no users. But then because it paved the way, like Uniswap became a big thing. DeFi became a big thing. And then that drove gas prices to like what seemed to be massively high at that time. And then, you know, then that 2.7 increase in the cost of performing certain functions that made, you know, gas for certain classes of users even higher. And then NFT stuff came out. NFT stuff is one just like the, you know, sending and receiving NFTs costs more than just a regular ERC20. but also the like minting aspect of it. A lot of these NFT mints created these dynamics where people would have gas wars, where they could ensure that they would get the rare NFT by clogging the network and paying the miners offline to run scripts that identify certain configurations, and then if they see something, like to reject all transactions except for mine.
Oh, wow.
So like there's a lot of that, like a lot of these gas wars going on, causing these networks, just to, $1,000 fees to buy, like if you bought at the wrong time. Yeah. So there's a lot of like, so the NFT stuff, that class of users, that levered up the cost. Who knows what the next like crazy deranged hype cycle, like whatever the next crop of teenagers are going to be trading.
Crypto kitties is back.
Yeah.
Crypto doggies.
Yeah, it's probably going to be crazier and more absurd than anything we've heard of yet, because everything just gets more absurd than the last. It's like the ICOs were crazy. Yeah. Like computational fluid dynamic token was a crazy, stupid concept, like crazy, but that seems tame compared to like ape with cigarette, like photo.
Shout out to Rare Pepes. If anyone remembers those. Those were before their time, I think.
Yeah, so like it gets more absurd, and every new layer of absurdity just adds gas costs to the users. So like, if you expect,
when you said the gas wars too, it reminded me. You saw the movie Zoolander, right?
Oh,
yeah, the gasoline fight incident.
Literally, it's like that, but in real life,
spraying each other's gas.
That's literally what's happening. And so if you think that's going to keep happening, then you should expect for gas to always be expensive. And you shouldn't have expectation that anyone does any work on your behalf to lower gas prices. Like, why would they? And so, like, do you, I mean, I don't know, I guess people do complain about prices everywhere else, but, you should always, and that's kind of what we went into it designing Maximus, was that, we prepare for we prepare for worst case scenario, because like, if you prepare for only the best case scenario, if that doesn't work out, then it's only failure. Like, you can only go down. But if you prepare for the worst case scenario, you can only go up, because what's the worst thing that happens? Oh, gas fees get solved. And then maybe that thing that was maybe driving like 10% of our premium, okay, maybe that gets discounted in. And then a handful of people that traded that spread maybe made some money, and it just works, like no issue. And so, I think it's better to go on the downside, assume the worst, assume nothing's ever going to improve, and then be blessed with upside, as opposed to relying on upside. And then when it doesn't go that way, then you're in a tight position. You don't want that.
I think that's a great way to think about it. I don't know how you're not going to have more success in the future projects too. You came up with Maximus and Gold Key, and it's just, like I said, just murdering the Richard Heart ecosystem for people. Just love it in every single way. And that was your first idea, essentially, or you're like, maybe your iteration of something that worked. You got out there, you had some trial runs, and then coming out with more stuff. Like, I think you'll be quite a sought after. You all be quite a sought after team in the crypto world, because you're making products that work and make sense, and you're planning for. You're like, worst case, it's still going to be great. And I don't think many people are doing that. They're following this rabbit hole of shiny thing. Oh, but we can do this, and all this attack surface and all these problems we might have, and network goes down and blah, blah, blah. And you're like, yeah, actually, everything should be fine. We thought about this. So that's something I think a lot of people appreciate, the diligence of doing it right the first time.
Thank you. Yeah, that means a lot that you remark on that. That's definitely how we approach it.
Of course, man. It's been fantastic stream. We like to end it with gratitude. So is there someone that you did something good for you lately, or some product that you're just in love with, or anyone you want to give a shout out to and show gratitude for or with?
Yeah. I mean, shout out everybody who participated in MAXI at all in any way, whether you even just thought about it and didn't do anything, or if you like went all in minting, like anyone who's ever thought about everyone it's been part of this whole story and journey. I will have endless gratitude, for you all. Thank you to everyone who just participates in the chat, participates in Twitter.
Gladiators.
Participating in the discussion, just helping things move forward, inspiring, encouraging. Absolute thanks, to all that. Definitely thank you to all the people that built like all the awesome things that we were able to build upon. So thanks, Richard, for making HEX. That's awesome. Because HEX was so good, it was so easy to build Maximus. Shout out Alex for making Hedron. Like that adds a whole other, we didn't even talk about the impact of the Hedron in the future value of the MAXI stake. So shout out Alex for making Hedron. That's like an awesome, just like wild card injected into our thing, which brought a whole lot of life into it. So thank you there. Thank you the team at anvil.works. They're the platform that I use the maximus.cash website and DApp was entirely built on Anvil. That's like my go-to tool for every product I build. I'm building on Anvil. Shout out Anvil team. I've been working on using their products since like 2018. And so definitely love Anvil. If you want to work closely with me, learn Python and learn Anvil. And so shout out Anvil. I think that was the first Anvil built product that did any type of like token launch. So shout out Anvil. Shout out Vitalik for making Ethereum. That's awesome. Shout out Richard for making PulseChain testnet. All of the testing happened on PulseChain testnet. So if anything, PulseChain testnet's an awesome testnet for Ethereum. So shout out Vitalik for that. Shout out you for having
mom and dad.
And
I'll never be here without
shout out my fiance for letting me do this while we're about to get married. Literally, wedding is
imminent. Congratulations.
Here I am drawing up all this. She's like, "Why did you do this right before?" And I'm like, "Markets don't sleep." So shout out to her. Thank you so much.
We said thanks for giving you some time to come on here and not giving you too much crap about it. Definitely glad I caught you before you went away into a well-deserved vacation honeymoon type.
Yeah. Thank you so much. I had an awesome time.
Yeah, awesome. Thanks, chat. You all killed it again. We build some subscribers here, murdering it. I'm on Anvil. Sorry, real quick, last question. That is, tell Gaimon about Anvil.
Yeah, so Anvil is a platform for building web applications with Python. And so it just makes it really easy. If you have like an idea for a product or you need a website, you can just very easily just like create and host and build and launch a whole, like the Maximus product is full, like the smart contract is built in Solidity, but everything else that the users used was built all on Anvil. And so it's really good for anything. It's just like like a web developer super tool. And so
awesome.
That's what it is.
All right, chat. Till next time, we got a packed week. I got live streams 4 days in a row, and I'm pumped. We're going to get some great content out. Thank you, everyone, for coming. Maximus.cash. This has been Dip Catcher. It is at Tanto Nomini. Say that right?
I pronounce it Tanto Nomini.
Nomini. There we go. Okay. I was like, I don't know if this is like, I'm sure I'm not going to say it right. But yes, follow him on Twitter. Maxi's out there. Buy it, sell it, do whatever you want. You know the fundamentals. It's been great, everyone. And until next time, we'll do the outro. See ya.